Finance Minister Park Jae-won announced that the government will turn the Economic Policy Coordination meeting into the Crisis Management meeting starting next week. The move comes as the recent economic turmoil in the Eurozone and the financial uncertainties in the U.S. are raising concerns in the global economy as well as in Korea. And today's In Focus, we will take a close look at the current state of the Korean economy now in its emergency mode. Joining me today for the discussion are Professor Ho Chang-guk from Chungnam National University and the researcher Mr. Kim Kyung-hoon from Samsung Economic Research Institute. Welcome to our program as always. Well, let's start our today's discussion. The Korea seems in some serious trouble right now, Korean economy. And very recently, the Korean government announced a series of new decisions. Last week, President Lee Myung-bak decided that he will revive and preside over the emergency economic meeting. And just after that, it was also announced that the weekly economic policy coordination, the meeting, will also be turned back into the crisis management meeting. How we can understand these a series of new decisions made by the Korean government. Professor, how would you please?
Well, it's basically in reaction to what's happening outside Korea, not something that's happening within the Korea. So it's, as you mentioned at the beginning, it's the external environment that's getting worse, becoming more uncertain. And we've seen this in 2008. And the adverse impact was quite large in terms of financial market volatility and real economic contraction. At that time, Korean government was in this kind of crisis management mode, and it helped Korea to react quickly and efficiently. So we've seen the movie before, so it's sort of replay of it, and government is getting ready for the eventuality of things getting worse.
Well, Mr. Kim, could you add up more detailed actions or decisions made by the Korean government?
For now, the government has not announced detailed plans, as it could give unintended consequences to the market and give wrong signals. Rather, the financial minister said it is not yet time for contingency plans. So rather than taking dramatic actions to lower the market volatility, the government is mainly focusing on stemming the spread of public anxiety. So for now, the government is standing by with its three-tier contingency plan, of which the first draft was prepared in May, and it will continue to update it as the market develops.
I see. So we have to wait to see the complete version of the Korean
yes, when the crisis actually appears.
I see. But I'm also very curious about the reason why the Korean government changed the economic mood into the emergency mode. Could you explain about the background of the recent, the latest decisions made by the Korean government?
Well, in terms of external environment, this is nothing new. Basically, things in Europe this time around is sort of coming close to crisis situation. It's good news one day, bad news next day, that kind of situation. But it's not only Greece, which is the focus of discussion at the moment, but there are other potential problems that could spread, due to the situation in Greece.
Could you explain about what the potential threats they are?
Oh, at the moment, the concern is mostly European banks who are holding a lot of Greek government debts. If Greek government defaults, these banks, basically the value of the bonds they are holding will drop depending on the amount of discount. It could be 50% or more. That means big loss to large European banks, and that can have very repercussion, serious, around the globe, including Korea. And we've seen some sort of preview of what could happen in terms of in Korea already. That exchange rate volatility has picked up. Stock market doing a lot of roller coaster, these days. So already there are indications that things could get worse. And I think the government decided it's about right time to get in the mode. So we don't know exactly how it's going to pan out.
I see.
But it's perhaps prudent to be in preparation mode for the possibility that things could get worse.
Well, as Professor He pointed out, the Korean stock market, I think it got huge impact from the financial crisis.
Yes.
So could you explain more about the situation? I mean, the state of the Korean the stock market.
Yes. Following the points Professor made, I think the volatility really started to pick up in September when Troika, made up of IMF, the EU and ECB, decided to leave Greece over the emergence of divisions with the government over the execution of reform programs, which was agreed in the first international bailout package.
Right.
So when the volatility intensified, then bad news kept on coming, such as credit rating agencies downgrading Italian sovereign debt credit ratings, and France Bank's credit ratings. So the Korean stocks dropped 10% in 3 days before the 27th of September after these news. And it was reversed and gained over 5% on just 1 day.
Oh, 5%,
yes.
right?
And when it was heading south, investors were worried that it might break the 1,600 barrier. But also the good news came, such as the Finnish and the German parliament approving the EFSF's expansion plan. And it is staying above 1,700 for now.
Do you have something to add?
Well, it's this particular stock market situation. This environment is becoming more uncertain. So investors are becoming very risk sensitive about any news about additional risk. So one day there's bad news, then stock compared to other assets are a bit more risky. So they dump, unload, sell a bunch of stocks, and the price drops a lot. Following day, there's some positive news. Then the view that the price of stocks have fallen enough, so they look cheap. So there are buyers jumping in. So we are seeing this up and down, large movements.
So, Professor He, I would like to ask one more question. Well, as we discussed so far, the Korean financial market, stock market, has been influenced a lot whenever we face the financial crisis. Well, more volatile than the other countries' stock market. So what kind of measures do we have to take?
Well, it's in some sense, it's an indication that Korean stock market has been a good place for foreign investors. The selling, most of the selling that's been going on has been done mostly foreign investors. As mentioned earlier, their situation in Europe is getting worse, so financial institutions and investors there need to raise cash, dollar funds and whatnot. So from their point of view, they're basically sort of getting increasing their holding of cash. And since they have been in Korean market in large number, because Korea has been an attractive market, this is large liquid market, so it's easy to sell their stock holdings, cash it, and for their own use and need back home. But it's still sort of seeing these real large movements up and down. It's not really sort of helpful for other investors. But also another concern perhaps is that Korean stock markets are dominated by large exporters. Korean large businesses, they are exporters. So if external environment worsens drastically, then there's going to be some negative impact on the profitability of large Korean companies listed in Korean stock exchange. So there's a bit of concern about that. So when it goes down, there are enough worries to sort of reinforce themselves, so it could drop a lot. But so far, it's, I think, mainly sort of a reaction to, European investors withdrawing their investment for their to increase cash holding back home.
So, at the moment, we cannot find the best solutions to stabilize the Korean stock market.
Well, it's in terms of stabilizing, it's a area of private actors. It's not something the government can do much about. These are investors, buying shares, expecting to make gains. Investors selling them to reduce the loss and so forth. So at the margin, Korean national pension holding could act as buying and selling. It's a so-called big player in the market, so they could, in some situations, sort of soften the blow.
Yes.
But for them to act purely for that purpose, that's not good, because they themselves have to be concerned about raising rate of return for their investment, because they are doing investment for future Korean generation. So, once the outside situation stabilizes, so it might take some time,
yes.
then we should be able to find sort of flow to the current downward trend. And afterwards, as we've seen in the past crisis examples, there's likely to be pretty substantial bounce back once that's done.
Yeah, I know. Well, that's not the simple question to find an answer, actually. Mr. Kim, actually, along with the stock market, the Korean FX market, exchange market, is also on roller coaster ride these days. Well, could you explain the current state of the Korean FX market, and if the situation is getting worse, what kind of potential problems we will have?
The movements of the $1 exchange rates have been very volatile, dropping and rising by 31s a day, and is causing a lot of confusion, not just in the market, but in the whole economy. This is mainly caused by external factors, following the points Professor He made on the stock market, volatility in the stock market. Until August, the won was actually very stable, thanks to favorable internal conditions, such as fast recovery of the Korean economy and expanding foreign reserves and declining short-term proportion of short-term debt, foreign short-term debt. But now, as the uncertainty is intensifying, the dollar that weakened after the downgrade of the US credit ratings is actually once again become the safe haven. It is gaining its ground. So as a result, the Korean won have lost around 10% of its value in the last 2 months, which is one of the largest falls against the dollar, along with the Australian and the Swiss franc, Australian dollar and the Swiss franc. So rising exchange rates raise concerns in local industries, which rely heavily on imported raw materials. Especially airlines and food manufacturers are already feeling the pressure. So also the already high inflation is likely to continue to increase if this depreciation of the won continues, and because this will cause import prices to rise. This means that the purchasing powers of consumers will be eroded, having negative consequences on the domestic demand. And usually, currency depreciation will have a positive effect on exports. But with this gloomy forecast of the global economy, the effect is likely to be very limited.
Well, there's a saying that the economy is too much, heavily rely on the European loans. And this can be one of the reasons why our financial market has more volatility than the other countries. What do you think about this argument, point?
By looking at the European proportion in Korea's loans from abroad, one could say that the exchange rate should be stable, because only 32% of Korea's external loan is from Europe, and whereas that for the world is 56%.
56.
So it is actually much lower than the world average. But if one includes the indirect loan from abroad, the figure could surely rise a bit. But regardless of this fact, the search for safe haven is likely to continue in the near future, especially with the European capital flowing out rapidly. There's a credit constraint back home, is raising the overall liquidity risk. So rather than criticising the proportion of the European money in the Korea's loans from abroad, I think the main key factor that we should focus on is how this overall liquidity risk is going to turn out. And there are several evidences that it might actually get worse. Investors have begun to reduce their holdings of the debt from European banks, and the dollar supply is drying out very fast in the European market. According to Fitch Ratings, the sample of 10 largest US prime money market funds, MMF, reduced their exposure to European banks by 27%, as of the end of August from May. And this means that the European banks' exposure currently represents only 42% of MMF, which is the lowest level since the second half of 2006. And another sign of credit constraint is a rise of spread between Euribor interest rates and overnight index swaps, OIS, which measures banks' reluctance to lend to one another in Europe.
Right.
This figure was around 20 BPS in June, before rising to 80 BPS more recently, putting pressure on banks as high interbank offered rate burdens their operations. And lastly, the overnight deposits by European banks at the European Central Bank is also rising very fast, indicating that banks prefer to park their money with the ECB rather than lending it to one another. So the figure shows that it rose from 50 billion euros at the end of July to almost 200 billion euros. Yes, so increased, almost quadrupled. And this means that the liquidity risk is going to rise. So the money is likely to flow out of Korea, irrespective of the proportion of European capital in the Korean's external loan.
So BPS stands for what?
Basis points, sorry.
Yes, right. Because for the viewers, some of them do not have some knowledge about terminologies. And then anyway, I'd like to give a very big question to Professor He. Well, as we so far discussed, all our economic indexes in Korean market are not very good, though. So we have to think about the measures the Korean government should have to take in the middle of the so-called financial crisis.
I think it's important to sort of put right priority on things. For example, given the situation, some short-term volatility is unavoidable. So it's the focus has to be on sort of the impact of this outside adverse condition causing new and additional domestic problem. So perhaps, we can sort of spell with the volatility of stock market, exchange rate, but in terms of making sure that Korean financial system is not damaged, or Korean corporate sector doesn't have too much of a problem because of, for example, short-term liquidity crunch that applies to banks too. So it's so if one focuses too much on sort of short-term volatility of financial market price variables, then one could be sort of overly excited about that. But more serious is emphasis has to be sort of preventing any sort of secondary worsening of Korean domestic situation. Korean banks, if they have real short-term, dollar fund shortage, government could help in such a situation. And also in corporate sector, businesses having a short-term liquidity problem because of, as mentioned, the short-term liquidity situation, dollar fund situation in global market is getting pretty tight, and they could impact businesses not being able to raise the fund that they need immediately, or not getting paid for their exports as scheduled.
Right.
So it'll be, it's prudent to sort of make sure that this kind of problem do not get, out of hand or get too large, preventing that. And also sort of the domestic problems such as real estate prices and all that, the domestic asset prices reacting too drastically to this kind of external developments. So those are the things that I think government needs to focus on.
Yes, I think so. By the way, Mr. Kim, actually, well, as we discussed so far, the Korean government is making every efforts to overcome, so to speak, financial crisis. So, how do you forecast the Korean economy?
Samsung Economic Research Institute forecasts that the Korean economy will grow 3.6% in 2012.
6.3%?
3.6%.
3.6%, yes.
Down from this year's growth estimate at 4%.
Right, right.
And the world economy is expected to grow 3.8% this year and 3.5% into 2012. Korea's three growth engines, namely exports, domestic demand and government stimulus, are all likely to lose momentum from 2011. The sluggish global economy will hurt Korea's exports, and the growth rate will fall from 21% from 2011 to 12% in 2012. And also it will be very difficult for the private and the public sector to expand their spending because especially slower income growth, high inflation and external economic slowdown will affect the private consumption, rising by only 2.7% in 2012. And the $1 exchange rate for the next year will drop to 1,061 from 1,101 this year. Already a little bit over that this year, but this is the average figure for the year. And the market rates will drop slightly from 4.4% this year, from this year's 4.5%. And on top of this macroeconomic forecast, the key to the economic and financial stability will be whether the Greek default will actually be orderly,
right,
and whether the effect will be contained before spreading to Italy and Spain. And of course, as we have been discussing, the Korean government's preparedness will be very important.
I see. Well, time is very limited, so I'd like to ask a very last question to Professor He. Well, we discussed about the actions which Korean government should take in the middle of the financial crisis, but I want to ask you that as individuals, what kind of measures, what kind of preparations that we have to make?
Both businesses and individuals, when things get uncertain and worse, the cash flow might be disrupted. The payment you expected might not arrive on time, and so forth. So it's better to prepare for that kind of eventuality. So to reduce exposure and reduce debt will be a good idea because if your future income is uncertain, your future obligation need to be reduced, controlled. Yes. So those should be sort of an important thing to keep in mind.
Okay. Well, thank you very much, Professor He and Mr. Kim, for sharing your insights on today's topic. From the discussion, we found it out that the Korean economy seems to face some difficulties in the future. But to overcome these difficulties, the cooperations between the government and the people seems to be very, very important. Well, this is all for today's In Focus, and I'm Shin Sang-hyuk, and see you next time.